Which brings us to VestGen Wealth Partners. We've got the founder and wealth partner on, Mr. Craig Bolanos in Chicago. Craig, thanks for being on.
Hey, good morning and a happy Halloween. Certainly October's been a lot more treat than it has trick, but Scott, the production value of your show keeps elevating. That opening was fantastic.
Yeah, well, I mean, that surprised me too. All right, here we sit. It was a pretty busy week. We've had five of the Mag 7 report, I think. Do we have two more to go still here? Am I wrong with that?
Yeah, we got a handful. It's been a bit of a mixed bag, but again, the winners have more than offset any of the disappointments. I would certainly not call any of them losers, and thankfully it hasn't been damaged at the top of this index. I mean, again, you got 10 stocks representing 40% of the S&P. Holy smokes, that's why everyone's with bated breath when you do these earnings reports.
Yeah, and it's not the first time that's happened. And I'm usually a Debbie Downer. I've always been worried about what my customers might have happen to them. So I don't have any customers now, but I still have that inkling to kind of protect. And I understand that the market could trade off. There could be some people that peel out of these things. There could be some weak longs in some of these stocks, but I feel differently about this time around than I did the last time around. I was knee deep in the .com boom of the turn of the century. I actually was the chief operating officer of a big tech firm in London while it was happening. So I had feet on the ground, saw a lot of what was going on, and I feel even better and more excited about this time around than I did with the .com boom. So and also these firms are making money. I mean, it used to be about eyeballs, clicks, and .com and whatever you cute little thing you could do with your name 25 years ago. But, I mean, just look at the balance sheets of some of these behemoths. I mean, $5 trillion for NVIDIA? I mean, it's hard to argue with.
No, I mean, the companies are making money hand over fist. I mean, you mentioned NVIDIA alone. That's a market cap more than $5 trillion. NVIDIA accounts for a staggering more than 8% of the S&P 500 in itself. And historically, while its forward PE is in that 36 to 43 times range, at least it hasn't gotten above 50 because that would bother me. That did bother me in the .com bubble. But the most interesting side note I was thinking about this morning, and it's not being a Debbie Downer, but it's just showing the asymmetrical risk at the top of this index. I mean, last time I checked, Scott, in the S&P 500, there's 227 stocks that are negative for the year.
Yeah, I mean, we had somebody on talking about...
sit with that for a minute. 227 of the 503 stocks that make up the S&P 500 are actually negative for the year.
It's almost half. Yeah, you're right. We had somebody on the show yesterday talking about that, Erin Gibbs from Slate Stone Wealth. She's really good. She's a kind of a statistician, and she wasn't saying get out of the stocks. She was just saying maybe you want to kind of rotate to more protection. Didn't sound bad to me. I mean, she makes some good sense, but her concern, like you just said, is the breadth of the rally is not good, right? It's very, very concentrated. But I do think that over time, as AI seeps out into the retail environment or the real world, like the smaller firms, and when they start to really embrace it, I think that you'll see those things slowly but surely start to catch up. What do you think?
Well, I do believe that I think a big part of the AI trade, the AI investment, this entire year actually has been non-AI companies, meaning identifying those companies who are going to have the largest benefit from artificial intelligence in terms of productivity per unit labor hour of work. So think companies in finance. Think companies in terms of media. Everyone instantly looks to healthcare. AI is going to totally help healthcare, make it more efficient, make diagnostics that much better, but it's not replacing the labor yet. But I do think about what this might mean for companies like Walmart, who stand to benefit tremendously.
Sure.
So the bottom line is this. The S&P, back in the .com bubble, 27% of the market was the top 10 stocks. Today, the top 10 stocks are 40. I'm not going to panic, but if the top 10 stocks eventually end up making 50, I'm going to start scratching my head and thinking twice. In the meantime, everybody, don't fight the tape. Stay long the market. Don't fight the Fed. And even though, we had some dose of cold water here for the December rate cut, I still think we're getting one.
It was interesting. You should take a look at Erin. Erin's really smart. She's with Slate Stone Wealth down in Jupiter, Florida. But she said, you might want to think about a defensive play, but she just said exactly what you did. she does. She definitely wants to stay in the market, and she definitely still thinks we're going to get a cut. So it wasn't all doom and gloom. She was just trying to be prudent. I think was the right word, and that's what she should do for her customers. Other than that, you don't have any trick or treaters in your house, do you? They're all kind of flown the coop.
No, that's why God invented nieces and nephews. That's your go-between before you're actually blessed with grandkids, right? Hey, Connor and Bree, if you're listening, no grandkids just yet. I mean, wait until I'm double nickels. I'm only 50. I got some distance, but no, I'm going to go get my costume out this evening. I'm going to go watch a great band at one of my favorite bars, and I'm going to do what all Americans who are eligible to carry an ARP card do on Saturday morning. I'm going to go play pickleball, Scott.
Oh, that's right. You're a pickleball guy. Well, unfortunately, I do have two grandkids, which is not unfortunately. That's fantastic, a 6-year-old and a 3-year-old. And they'll be coming down for Thanksgiving, so I don't have them around right now. But we just moved into a house this January. So I'm curious as to how many we're going to get. So it's our first year. So I'll be sitting out there waiting for any of the little ones to come by. But we're about, they're 3-acre lots, so it's not really an easy walk for those small little legs. So we'll see. But it's one of my favorite ones. I used to love rushing home on Halloween when my daughter was doing it. It was it's a lot of fun. So one of those better.
Wait. Let me guess what your costume's going to be.
Yeah, I know what you're going to say. Go ahead.
Oh, I'm not going to say it. I'm not going to say you're going to be Darth Vader.
Yeah. No. Well, yeah. I will have something cow on like I do every single day. I had a friend of mine who was a big media guy in London. He's very well known. He still does Fox Business once in a while. His name's Neil Sean. But he told me that if he ever catches me outside in public not wearing something black and white or cow related, he'll never speak to me again. And ever since I've been doing that, things have looked up. So every single day I've got something black and white on or something cow printish on. So when people see you, they go, isn't that guy? But then they get the confirmation from some of your clothing, and they're like, yeah, and it does work. I mean, it really does work. So I always do something like that every single day. My seamstress is Omar the tent maker, so she makes all of my stuff for me. But it works.
Got to keep the brand. Got to keep the brand.
Exactly right. Exactly right. All right. Have a great day. Have a happy Halloween. Be safe. Craig Bolanos, he's a co-founder and wealth partner at the VestGen Wealth Partners up in